morning. Good morning, everybody. Happy Friday. Happy Friday. We had NFP. Happy NFP Day. All right, I'm going to mark out these data highs and data lows real quick where news came out. Let's go with the opening range gap here. Close. Open. Opening range gap for the day. All right. How's everybody doing? Greasy, Rich, Chris, Steve, Shadow, David, Enrico, Binge. Hope y'all are doing all right today. Trump's tweeting or texting or doing something because I see a lot of Trump headlines right now, so we got to be careful. We have Jerome Powell speaking at 12:30 and then Trump speaking at 3 p.m. So we'll see what we get today. We'll see. We'll see what it's looking like. Here we go. Start at the daily chart. Still bearish, of course, for the moment. We took all the swings and sell side I had. Here. We took it barely yesterday here. All right, so now next stop, if we continue pushing down, we have a swing low here and a daily fair value gap right there that we have traded the middle of, which the lower portion from this low wick to the bottom here is remaining. And then we have more below. So we'll see if we continue pushing down or what we do here. Overall bias remains to be bearish, of course. And yeah, we'll see what we do here. So that's what the daily is telling me. You know, we have some targets a little bit lower again. If I go to the 1 hour, look yesterday how beautiful this was. We came off, took this sell side here, went right up into internal range liquidity, 1 hour fair value gap, and dropped. So I'm kind of looking at that again today. We had some buy side liquidity here, 1 hour fair value gap. And with the news, we shot up, cleaned out all this buy side liquidity, internal range liquidity right there. And now we have sell side down here. All right. And which is previous day low. So yesterday's low. So I'm watching that to see, do we try to kind of make another little run up? But if we're bearish overall, what could happen is we cleared some buy stops here. Right? So we could come down and clear out some sell stops. And then I would look for maybe a return to internal range liquidity and then drop. Or it's completely possible that this was all we needed to the long side and we could just drop some more. So we'll see. We'll monitor that, see how it goes. And then, of course, this wick we can use. Look at it as if it was a fair value gap where you have the whole thing. You have the midpoint here. So I don't want a big shaded area. So I'm going to throw my fib on it where I can measure the midpoint. Let's see. Where is the midpoint right here? Let's see if I can add some text. Mean threshold, 1 hour wick. One hour wick low. So I want to watch that. I want to monitor, and I want to take a peek at the 4 hour. As you can see, there's a little bitty 4 hour fair value gap there as well. Kind of the same thing on the 4 hour higher time frame. Yesterday reached up into this 4 hour fair value gap. If I mark it, I bet you we reached it up into the middle of it. Look at that. Beautiful. Right to the middle of it. Drop. Same thing here. Little bitty one. News took us up. So we'll see. We'll see. We'll monitor it. Let me drop to the 15-minute now. And as you can see, smoothing this up here, ran up. We have some sell side liquidity here. We also have this fair value gap on the 15. And then we do have up here. I don't think we make it up there, but we very well could. Because remember, yesterday we left this big, huge opening range gap unfilled as well. So eventually price will come back up there. Not sure it'll be today, though. We'll see. So as price does come up, because this very well could be engineering some more extra, sell side liquidity here. Because like I said, we had that wipe up here. It may draw up a little higher and then take sell side, or it might take sell side, have a pullback, and then drop. That's kind of what I'm looking at for the day. Good morning, Tyler, Will, Benton. How y'all doing? And this could be a potential bearish order block on this 15-minute. So we could monitor the midpoint of this as well, right here. And we do have a little bitty fair value gap right there on the 15. I wouldn't really, 4 points, close to 4 points. So I'm not going to mark it, but I'll just kind of remember that above the midpoint of this candle. And, through more studying, and I've kind of mentioned this over the last couple weeks, when you're looking at keys, not keys, like things that could basically give you hints if it's a high resistance liquidity condition, low resistance. Like I mentioned a few things here and there, but one of the big things is looking for fair value gaps every 15 minutes on the 15-minute chart. Like if there's no fair value gaps, you might be in high resistance liquidity conditions. And then on the 5-minute as well. 5-minute will give you a little bit more, but if there's none on the 15-minute, you're probably in high resistance conditions at the moment. With that being said, I'm kind of more on the fence of, because again, this goes back to, this is why charting, journaling, constant review is so important, because you're always refining, always improving, always seeing where you can get an edge. And looking back, the days I've taken trades without a fair value gap on the 15-minute, and it doesn't even need to be in the fair value gap. It just needs to produce one to show that there's movement in the market, right? Where it's low resistance conditions. The days I've taken a trade and there wasn't one, it either didn't win or it didn't win very quickly. Like, it was kind of like, I don't know. So we traded right back up. So basically, I said all that to say I want to watch the 15-minute chart a little bit more until we get to either a buy side or sell side or internal range liquidity point. When we get to any of those areas, then I can start dropping down time frames, 1 minute, 2 minute, 3 minute. Although, I like the 1 minute the most, but I might need to start taking a peek at the 2 minute to give a little bit more of an insight. Especially in these days, these days lately, the market's been tough. If you're on social media, you're seeing a lot of people blow accounts. And when we're sitting here, we've said many times, man, I'm sure people are getting chopped up right now. And just because I can see it doesn't mean when I take a trade, I'm winning all the time either, right? 40% of the time I'm going to lose. So, it is what it is. All right. So also, sizing down is definitely not bad. And what I'm doing is, so my leader, because lately I've been trading my my personal funded account with 2 micros. I've gotten a buffer enough to where I feel comfortable, because I trade extremely caution. Like whatever I trade on my PAs, I'm like even half of that on my live, just because that's, you can't reset that account, right? So I finally came up to 2, quantity of 2 here. So the nice thing is, because the copier is a ratio, right? I set my full contract limits to match with this 2. And if I measure out, like, let's say I have a 40, 50 point, I need a 40 or 50 point stop, or in the market's very volatile, and I'm like, ooh, that's a big stop. All I got to do is just boom, drop down to 1, and all my followers are reduced in half, nice and comfortable. Makes it very easy than having to try to go back to the copier or have 2 tabs open of it, and it's a pain in the butt. But also, I figured looking back, if I watch the 15-minute a little bit more, like while we're sitting here until it reaches buy side, sell side, or internal range liquidity, then I'm less likely to enter something that I shouldn't. Know what I mean? Less likely to enter something I shouldn't. So until price draws, because that's my rule for my model, my number one rule is price needs to draw to liquidity. It needs to have a draw to external range liquidity or internal range liquidity. It has to draw to one or the other. So if I sit here and wait, I let it draw to one, then I drop down time frames, and it'll give me less of a chance to take a bad trade, like a mistaken trade, by sitting here and getting tricked into thinking something is setting up. Hope that makes sense. Hey, J Rob, happy Friday. Good to see you again. Benton, I haven't had a trade this week because stops are too big for me to be comfortable with, even one MNQ. You know what? I want to give you a round of applause because that's the right thinking. And don't feel any type of like anything of not getting a trade. Like, you can't. So y'all saw February, I traded like half the month. My trading days was like 9 or 10. It's fine. But guess what? Overall, with all my accounts, I made 30 grand and took a payout. So didn't take a 30 grand payout. Full transparency. I've only taken two small $2,000 payouts, 2,000 total. Like, I haven't taken much out. All right, so we are drawing up here. We have our data high right here. We have this wick here, and here's that midpoint of it. Well, actually, here's London high. Here's the midpoint of that wick right here. So I'm just watching. And see, here's the thing. If we get a 945 fair value gap right here, actually, this would be a 930. So this fair value gap, if we get one here, would happen at 10 a.m., would confirm a fair value gap. And at that point, what I'm reading is, do we hold support in it or do we go through it and invert it to go down, depending on how high we drew up? So if we drew up all the way up here, left this fair value gap, then I believe we're definitely going to head back down either to it and hold support or to it and through it. So I can look for a short up here, or once we get there, I can see how price reacts there. I don't really have much. I mean, I guess there is a reason to go up, but I really don't think we go much up higher than this area here. The 226 to 300. I mean, that's kind of a big range, but I don't think we go much higher than this area. Again, the midpoint of this right here, this 197.50 area, that's going to be telling. I could see us getting back here, but just wait and see. I'm still seeing a lot of kind of like red headlines and popping up and different things going on in the world. That's fine, Benton. That's fine. I'm not gonna lie. It's like not the easiest thing to watch setups go by and to sit out because the stops are too big, even for one micro. Like, I'm not saying it's easy. So that's why I gave you a round of applause, because it's hard, and to do it is the right thing to do, in my opinion. We just got to see where we draw to, because Now there will be, I'm sure, like that's 20,000 mark right there. It's a pretty big level. It's a pretty big level. It's a pretty big level. Even though I think we're gonna go lower, may not be today. We'll see. But we're engineering some more sell side liquidity here. A lot of Powell speaking at. This is what I'm saying. Like we have Powell speaking at 12:30 and Trump speaking at 3. So there's a chance I might not get anything. And we had an NFP. So we have a shakeout, right? If you look here, I mean, NFP, it swept the low and swept the high, right? So we may be in a kind of an accumulation mode. I'm not saying we will, but we just have to know the situation. With Powell coming out and speaking, we may have a moment where we might not do too much. And then Trump speaking. So all I'm saying is we just have to be careful not to get caught in stuff. And it's Friday. So I have to follow my number one rule on Friday, which is don't do anything stupid. And then I'm not trading. So I looked at my schedule. I told you I'm not streaming all next week, but I'll probably be trading. But I finally got our schedule released last night for our basketball schedule. And yeah, I'm probably not gonna be able to even trade. So yeah. So I'll be missing a whole week, which hey, it's fine, but you know, I don't want to do anything stupid on a Friday and then have, especially a Friday. Friday's bad enough, but then a Friday that I have to pretty much sit out the entire next week. Oof. All right, let's see what A-Train has to say here. He says, here's a success story for everyone. I had a PA with only $40 left in drawdown. I saved this account for a month waiting for NFP. Well, ended up working, made 1K for that account to get it back. Good job. Although, was it a YOLO? Shadow, that's Chris's Friday rule. Just keep in mind, A-Train, that I don't know if you use Apex or whoever you use, just whoever you're using, just keep in mind of the consistency rules. I mean, I get it. $40 in drawdown. I'm not knocking it. You basically, that account was basically gone. Right? So it's like, I'm not knocking it. I'm not knocking it at all. Cause that one is I mean, yeah, you basically counted that one as out. And hey, it's back alive. You might have to, depending on consistency, wherever your account is, you may just have to, I mean, all it is, and see, really, consistency is not a huge deal as long as you just keep trading. Like, let's say you went over a windfall by 40%, 50%. Just keep trading, build it up, just keep building it up. If you have other accounts, focus on the other accounts and just tag that other one along and just build it up. Just keep trading. That's what everybody. It's like really not a big deal, but just keep trading. I mean, kind of, Erland. Yeah. $40 left in drawdown. I mean, hey. All right. Reaching the mean threat, but I will drop down and find the first presented fair value gap. Let me do that so I don't forget. 930. Right here. Woo, got a little lag going on. So if you really thought price was going to come up here, we did. invert right here, this first presented fair value gap, trade it right into the upper half, and we're going up. Here's mean threshold of that 1 hour wick. So I'm watching this area. We tapped that 1 hour fair value gap again. We have London high right here. I mean, I'm saying, like, when I'm saying I don't think things are going to happen, that's not me saying like I am always, you always got to keep your mind open. You can't just say, oh, it's definitely not going higher, I'm just going to short here. Like, you can't, because anything can happen, right? Like, it can, yeah, it can go up to this 15-minute fair value gap. It can go up. And like I said earlier, we still have that opening range gap from yesterday that it didn't fill. So will it fill it today? Maybe, maybe not. You just have to know where price could draw to and see, do we get a setup there? No. All right. It's continuing. All right. Where's the next draw? Okay. Do we get a setup there? No. Okay. Where's the next draw? Do we get a setup there? No. Oh, finally we get a setup there. Or if it's during my session that I trade, and if it's past my time and nothing set up, nothing set up. It's just that simple. So, and that's the other thing. Like, I'm never going to get caught up in like caring. Like, I love to stream. I love y'all being here. Right. But I'm a trader first. So I'm never going to get caught up in like worrying about what's it going to be like for the stream. So just so y'all know up front, I'm going to say that. So this is where I was saying at 10 a.m., if we get this fair value gap, it'll be at 10 a.m. And at that point, great. Now we have fair value gap. We're in probably low resistance conditions. And I'll wait to see where we draw, and I'll either take a trade back to it, internal range liquidity, or if there's no trade back to it, I'll wait till it gets to it and see if it holds support or gets inverted. It's literally all I'm going to do today. Next 7 minutes. And we did have, I mean, we still have this clean buy side liquidity way up here from Thursday overnight that we never ran up through because we ran up to internal range liquidity. So we didn't need to go to buy side liquidity. Then we have these highs up here as well. We still have last month low, last week low here. And I have, this is where I have my buy side liquidity right now. Or that was buy side liquidity before this up here. So this would be the actual buy side liquidity for the moment. Because I had buy side from here, from the 1 hour from earlier, right here. Which news swept all through that. Here's a bunch of economic advisors talking, and still Trump headlines coming out. All right, here's London high. Let's see where we go here. Where the bodies are closing. Look at this wick, how it reached up, closed down at the midpoint. So let's see if we displace down from here or not, or if we continue up. We're likely, there's 3.5 minutes left, so we're likely to get that 15-minute fair value gap down here, but I'm going to keep my eye on it. Watching this swing low right here to see if this swing low gets taken right there. Equilibrium is right here with that old buy side liquidity. Equilibrium of this dealing range right here. So we took this swing. See if we get a fair value gap here. $184 swing high. See, that's a 50-point stop. Pretty big. Pretty big. In 2 minutes and we'll get that fair value gap from the 15-minute. So here, I'm going to probably short here. I'm going short. And I'm going to target right here where that equilibrium was. At about 135.50. My stop is just right above this little high right here. See if we can get a little quick hitter here for about 50-ish points. I don't see why we would stop right here yet. Although we have 1 minute and that fair value gap will form right about here at 142 area. If we struggle a lot, I may go to break even quicker, but we're very close to my target, so I'm going to go ahead and move to break even plus commissions here. See if we leave this unbalanced and leave a fair value gap here. And we have 50 seconds before that fair value gap forms. So let's see if we can get a little quick knockdown target right there. Come hit it. Very close. Ooh, got so close. Look at that. It like wicked right there. That was a very close wick. Like, I might close this because it was like right there. I might close this. Because it got, I mean, like a tick away from my target. And we're about to get that 15-minute fair value gap. So I'm going to tighten up here just in case we don't pop through it. There we go. There we go. Order canceled. That's the type of Friday that I love. Look at that. beautiful. 15 grand. And that's what I was saying yesterday. I took a loss and it looked a little bigger than normal. It's because I sized up. This was just too clean for me. This was perfect. Perfect framework. Perfect everything. Like, this to me is an A+ setup. It went exactly where I thought the draw would be. And displaced, took this swing low, left a 1 minute fair value gap, reached the midpoint exactly, and dropped right back to the first presented fair value gap. It created the 15 minute, but we got in low hanging fruit. Wham, bam, thank you, ma'am. $10-minute fair value? I don't even look at a 10-minute chart. Yeah, awesome. Great job. So, to backtrack, to recap, this was my framework, all right? I still have that bearish underlying tone, narrative, where until we start pulling up and have days where we're trading up, I gotta stay bearish. Yeah, I'll get into that where my buy side draw was. So look, I think ultimately we're gonna go lower. So this is where I had originally, this is the 1 hour chart. Originally I had buy side liquidity here, this swing high, and I have this swing low here. All right. There's no fair value gaps in the middle. There's no internal range liquidity on the 1 hour chart. And this is where I said I was measuring this wick. This was news wick, and this wick cleaned buy side liquidity. Keep in mind, if you have an underlying narrative to go lower, you need price to wipe out the buy stops first. Here, it had with the news, it had a minor sweep of sell stops where it came down, and then it ran up, swept buy stops. So sell stops, buy stops are all swept. They're clean. So it doesn't need to trade higher. We have this 1 hour fair value gap, which is internal range liquidity. That's where also, we traded to the midpoint, here the midpoint, and here we rebalanced it where we traded all the way up through it, cleaned out the buy stops. So I was waiting to see if we do head up, where are we going to draw to? We have London high. Are we going to draw it back into this fair value gap and then go down? Or are we going to take sell side first and go up? Like, I have to still wait. So that's where my old buy side was. And then the draw, I'm looking at this 1 hour fair value gap still. And then the high of this swing was the current buy side, but I didn't need it to trade up there. So if we go to the 1 minute, that's what I was looking at. Like, I don't need it to go up here because it wicked up. All I really needed it to do was come back into this 1 hour fair value gap. Then I would look for my setup. But like I said, if it kept going up, like, this is obvious displacement, took the swing low, left a fair value gap. I got to take that because it drew to a likely area that it could go down from. So if it gives me a setup, I got to take it. And I go for the low-hanging fruit. Let me throw my executions on. I go for the low-hanging fruit. And however, if it would have kept drawing up, then all I do is, where's the next draw? Buy side liquidity, where I hear that high from news, and then internal range liquidity right here. And that opening range gap low. As soon as it reaches this area, do we get a setup? That's it. That is it. And that was what, like 50 points. That was a nice Friday there. 189.75 minus 135.50, 54 and a quarter. So that's 217 ticks. And do I expect it to continue lower now? I mean, it might, but here's where I was saying this is where I would be watching the 15-minute fair value gap. And that's why I want a fair value gap to tell me it's not high resistance. But now that's why I was watching this one. 15-minute fair value gap. And I got a lag. And it created it, right? So then what did we just do? Internal range liquidity now. Rebalanced it. traded through it. Now, if it does want to continue up, it can. But like, that's why I had my target right here. Look, 135.50. I guess I got some good slippage, a little bit of slippage. I don't know. I was right there. Anyways, like right where this gap formed. That way, if price did want to hold support in here, I'm out. I'm out. So if it holds support and price wants to continue, it can, because I'm done. But if it does come down, stay in this area, invert this fair value gap, that's when I would say, all right, now we're ready to continue down to this 800s. And that's what I'm saying. You know, my 17,000s is not looking so crazy. High 17,000s at some point. Yeah, I mean, I don't look like, yeah, we took London high with this run up, but I'm not necessarily looking, I'm not killing the London high, and I'm not also using it as like a huge thing. But when it's overlapping the midpoint of that 1 hour fair value gap, and this wick up is just a clean, it's manipulation, right? News is manipulation. It cleared the buy stops. So that's all it did. And it came back down and closed here. So when we reach back up, I wasn't necessarily using the London like, oh, it's sweeping. It's not really sweeping, but it's just heading back up into this internal range liquidity. That's all it really was doing. But the whole key is this move right here is body's closing. And see, this is what I was trying to say when I said watch this wick. Right here, this wick. Because here's when you do start reading candle by candle. When you reach a certain draw, then you can start reading candle by candle. Look, we closed here, came down, closed here, right? Open, reached all the way back up, and closed here. Opened, displaced down. So that's where I was watching this wick right here. Reached up, closed right there at the midpoint of that 1 hour fair value gap. And from there, displaced. That right there is all I need to know. The bears came in, or the bearish algorithm came in, kicked on, whatever you want to call it. Because it closed here, right? It reached up, closed here. Then the next candle opened and displaced. That right there was, let's go. That's the real, after the draw, the reason why I hopped in and was so confident on it. So if you take anything from this video, that right there, I would say is the golden nugget. And it was early. It was only 10 o'clock. That's the way I like it. No heat, very little heat. 3 minutes. Let's go. Oh, man, me too. I think everybody loves the no heat trades. I'll take some heat as long as I'm already in profit. It's just when the trades that you hop in and you immediately go negative and you sit negative for a while, it's like, oh, come on. I mean, I always expect, like, you know, when I take a trade, I always know the potential. I enter here. I know price could trade all the way anywhere back into this area. That's why my stop is here, right? So, like, I know it could, but nobody wants it to. Nobody wants it to at all. No, it was so quick because I got in at I got filled at 189.75, which was right here. And the high of this candle was, wow, it went all the way up to 198. So I was like 9 points, about 46 negative at one point, but It went so quick, it probably didn't even flash onto my screen. So not bad, not bad. I needed that one. Especially, I mean, it is just great. Like I didn't need it, but you know what I mean? It's just a good mental capital feeling that, going into the weekend with a win, going into not being able to trade for a week with a win. So, yep. Very nice, very nice, very nice. And that's it for me. Like that's my framework. It's done. It's done. Like that's why I like to take one trade, because I want to frame it out, win or miss, or win or lose, and it's done. My framework's over with. It's over with. Yeah, Rich. Low hanging fruit, 54 points. You can make a living on 35 to 60 points a day, or 60% of the time. As long as you don't do anything stupid, which has been my problem for 5 years, although it's been under control. But January, I tell y'all, I didn't have a good January. And the reason why I didn't have a good January is because 2 days, I took an extra trade. See, as much as I preach discipline, and as disciplined as I am, we're human. I took 2 days, I took an extra trade and they lost. So now I'm down double. So it takes 3 days or 2.5 days, 2 days to make up those, right? So times 2, because I did it twice. So 4 days I got to trade to make it up. So we're taking time there. And then another day I traded like afternoon or something stupid that I don't normally do. So that was a loss. So I'm like, it's just ridiculous. So that's why February was great. But the first week of February, week and a half or so, was me bringing it back up until I could finally get to taking some payouts again in towards the end of February. So it happens, but whatever. Yeah, I believe everybody. So if you have at least a high school, like if you were able to get up to high school, not even graduate high school, if you're able to at least get to high school, you should have the mental abilities to be able to be a successful trader, in my opinion. Now, the reason why I think 90% of traders fail and will fail, and most people won't make it, is because of discipline. And then they'll end up quitting or going broke. Until you get that discipline right, then you can become successful, consistent, and profitable. So, and yeah, see how we traded. This is balanced. This 15-minute fair value gap is balanced. We're trading back into it now. We're going to go through it. Because even though the 15-minute chart hasn't closed, we traded through it here. It is balanced. So now that we're coming back into it, we're not going to hold, right? We came back to this 1-minute fair value gap. Like this probably could be a silver bullet right here, and trade all the way through this sell side here and this sell side that I have here, and break through 20,000 now. But, I could be wrong, but that's a little volume imbalance right here. So watch that. But yeah, that's why I take the one trade. My framework's there, win or loss. That's it. There's my framework. All right. So for you all that's here still, go back to 2022 mentorship and watch video 2 and watch it 10 times before you trade again Monday, or like 5 times. Just do that. You'll see what I did today, and watch video 2. That's your homework. I'm giving homework now. See what I did today, everything I said, watch video 2. Maybe even watch video 2, come back to this stream and watch what I did. Watch what I said. All right? I'm telling y'all, I spent a lot of time last night and the night before thinking, reviewing, and watching video 2. And I really honestly feel like more just came together for me after doing that. Yep, Will. And I honestly, what you said, so Will said it's why pro athletes and veterans do well at this. They've got that discipline. Now, one thing I will say, initially, pro athletes, I wasn't a pro athlete, but I played pretty high level in basketball, and I'm still involved in a lot of high level guys that right now, and talk to them and everything. And there's a mindset. So initially, the problem with pro athletes is we're so competitive. Well, I wasn't pro, but you're so competitive that it's hard to accept losses in the beginning. But because of the way our minds work, we just like, and I've said this so many times, you go back and adjust. If I'm a basketball player and I shoot, right? And it's short. I know in my head, all right, I got to adjust my shot. I got to shoot a little harder, put a little more legs into it, whatever. Okay, the next time it went too hard, hit back rim. Oh, I got to take a little off. We're always trying to adjust. We're always trying to watch film. That's where you have a huge, huge, huge advantage if you're a pro athlete or even a high-level athlete. Huge advantage. The initial part is the competitiveness, not accepting losses. Once you understand, hey, I do need to lose because I will lose. I have to learn to lose. And then the rest of it, man, I'm telling you. Yep. Hey, read the book, The Biggest Loser. I think it's called The Biggest Loser, or The Biggest Loser Wins. Something like that. Wonderful, wonderful book. I mean, an amazing book. Let me see. Or The Best Loser Wins or something like that. I have it. There we go. Best Loser Wins. Man, I'm telling you, I read that book. Changed me. Hold on. Let me pull it up. Here we go. Best Loser Wins. Tom Hugard. Yep. This book right here. I'm telling you, that book. I'm an avid book reader. Like, to me, that's one of the, if you don't read books, there's so much knowledge out there that it's ridiculous in books. Trader Tom. Yeah, that, I mean, dude, that, y'all are going to get me going. We start talking about books. Oh crap. Okay. I got to hop off here, guys. I will be right back, or I'll see y'all in a week or so. I had something come up. I got to hop off. I'll talk to y'all later. Have a great rest of your weekend. See y'all later.